Hello, everyone. Thank you for joining us for today's session. Today, we'll be talking about HUECU's 40-year ARM. And today my name is Terrence Brazil. I'm a community engagement specialist, and I'm joined by my boss, Medalia Gomez, who's the AVP of community engagement. She will be posting links in the chat and keeping us on time. During today's webinar, we have reduced all background noise, so if there's anything going on in the background, please don't worry about it. And if you have any questions throughout this presentation, please use the Q&A feature. The chat has been disabled, as well as this presentation will be recorded. So if there's anything that you missed or would like to rewatch, it will be available on our YouTube page at MyHUECU. And there will be a post-workshop survey. Please let us know how we did and how we can improve. And just for joining us, and because we like you so much, there will be raffle prizes, and just because you joined in today, you have been automatically entered into winning one of three prizes, either $100, an ice cream gift card, or some HUECU swag. And a little bit about the credit union difference, in case you're not familiar, we are community focused. We serve all Harvard community and Harvard affiliates, and once you're a member, you are always a member. We also offer some premium products and services. We do this by offering higher interest rates on savings accounts and lower interest rates on loans. We are also available anywhere. You can access through online banking or pop into one of our many branches, and we'll be more than happy to help answer any of the questions that you have. So today's session is the 40-year ARM, and please be on the lookout for our future sessions in the Financial Scoop umbrella at huecu.org/financial scoop. So today's panelist is Helen Lascaris, our senior mortgage loan originator. She's amazing, she's phenomenal, and I'm kicking it off to you, Helen.
Thank you, Terrence. Welcome, everyone. I first want to talk about what are the benefits of having HUECU on your team. You have a lot of options for picking a lender when you're looking to purchase a home. This is an abbreviated session, so I'm going to highlight what I think is most important, which is a personalized service. You will be working with a loan officer from the time you're pre-approved through the time you close your loan. That loan officer will be available to you throughout the whole process to answer questions, to set up meetings, which I think is kind of unique. Reason being, the credit union is focused on, we want to have a lifelong relationship with you. So we're really focused on your best interest, and there's a trust factor here. So I have a lot of members that, they do their due diligence, they go check out other lenders, and they come back and say, I just felt home here. I just felt I could trust you here. And so that's one thing that I think really resonates with members and makes us unique. We do have a digital process where if you don't want to meet with anyone, you could do everything online. But I find that at the credit union, most members do want a hybrid. They do want to talk to the loan officer and do things online too. We have the functionality. Let's go to the next slide, Terrence. So what are the benefits of this 40-year ARM product? The reason this came about is because of the lack of affordability in today's housing market. So we're looking to either help you get a lower payment or build your purchasing power and hopefully have a future refinance when fixed rates do go down. Let's go to the next slide, Terrence. So what are the characteristics of this product? So it does require a 5% down payment. We have other fixed rate products for first-time home buyers with 3% down, but this product does require a 10% down payment. It's available for purchases and refinances. Every loan amount, whether it's a conforming or jumbo, that's lingo, meaning any loan amount you can use this product for. And we do give our first-time home buyer discounts, which is 1/8 off our rate and a $500 closing cost. You would qualify with this product. So let's go to the next. So if you came to me 2 years ago, you would be taking a 30-year fixed rate mortgage without a doubt. And I have an example here. If you purchased a property for $500,000, single family or condo, put 20% down, got a $400,000 mortgage. I'm using rates from last week. Current 30-year fixed is 7.125. I estimated taxes and home insurance, and you came up with a $3,319.87 payment. A lot of people think rates are going to go down. So, lately we've had a lot of people taking adjustable rate mortgages. So they have a standard term of 30 years also, but only a portion of it is fixed. So let's show the next piece to this. So if you did take a 10-1 ARM, which it's a 30-year mortgage fixed for the first 10 years, and the rate is 6.625 at the time I did this illustration, you would be saving $133 from the 30-year fixed rate. If you could afford the $3,319 payment, you could qualify for $20,000 more. So instead of $400,000, you would qualify for $420,000. Now let's add 10 years to the 30-year term on the 10-1 ARM, the 40-year 10-1 ARM. Okay, now you're looking at the $400,000 mortgage, you're saving $317 a month. To me, that's starting to get meaningful. For example, it might be closer to what you're paying in rent, so you might have more comfort. I can afford this. Additionally, if you can still afford the $33.19 a month payment, the original 30-year fixed payment, but you say, I will consider a 40-year ARM, you can qualify for $453,000 versus $400,000. So now you're looking at, maybe you're in another category, you can get more square footage, there's more properties in that price range, so you're having more options. So this is just an illustration of, how you can either lower your payment or qualify for more money using this product. Let's go to the next slide. So what do you want to consider if you're thinking about this? Well, how long are you going to live in the property? If you're going to live there less than 10 years, maybe the ARM is a good option for you because you're never going to have to worry about that adjustment. Also, what about your income? If you feel you're on a good career path and you're going to have high income in the future, maybe you can take the risk and handle the adjustment. I have people that come in and I mentioned, do you want to consider ARMs? And they say, no way. I think rates are going to just keep going up. I want to know I can afford this payment today and that it's not going to change. So it's out of the question. So you have to look at your risk tolerance. And then you have to look at your thought of the future. Nobody really knows what's going to happen, but do you think rates will go down? If you think that, then adjustables may be something you will consider. So we would go over that with you in terms of your unique situation. So let's go to the next slide. Okay, this is a big question. Go ahead, Terrence.
Oh, perfect. No, you were great. First question, how can I afford a mortgage in this market, Helen?
Okay, well, it's not easy. What's happened in the past 2 years is that rates have doubled. Home prices have continued to accelerate, although at a lower pace. And there's not enough homes for sale for the people that want to buy. So the fact that rates have doubled means that a person whose income hasn't increased can qualify for less, but the prices have gotten more. So people are looking at moving further out, expanding their search area. They're looking at smaller places. People that wanted a single family might be considering a townhouse, looking to combine forces with other family members. You might have, I've had a lot of multi-generational people lately, like a mother and a father and an adult child, both renting. Let's get together and buy something. And that way we're instead of paying the landlord's mortgage, we're building equity for ourselves. I mean, this is still the American dream to be able to buy a home. There are down payment assistance programs out there. We just had one with the Federal Home Loan Bank. We weren't able to take advantage of it. We didn't have anyone that had an accepted offer when the money became available. It could be up to $50,000 towards your down payment, but it comes and goes very quickly. The money was available. 2 weeks later, it was gone. So you have to kind of already be pre-approved and looking when these programs come about. There's also affordable housing that is coming available in a lot of different communities. So that's when you're buying a unit and say, they're building a condo complex in Cambridge, 50 units, 5 of the units have to be affordable. So they're the same unit that's $800,000 or $1 million, but you're paying a lower price. So you contact the city and find out about these affordable units, get into the lotteries for these units, and hopefully you'll get lucky. I have 2 people right now, one in a Chelsea lottery, one in a Brookline lottery. So those are the things that I can think of that can help. I recommend you stay active. Don't just say you'll wait because we don't know that prices will go down. Just keep yourself informed about what's going on and keep yourself in the game, so to speak.
That's some good advice, Helen. Thank you. Move on to our next question. What is the cost to apply for a mortgage?
So when we look at someone and talk to them and pre-approve them, you have your down payment, but in addition, you have closing costs. So these are costs like attorney's fees, appraisal fees, et cetera, and you can ballpark them at 1.5% of the purchase price. So in our example, the $500,000 purchase, it would be $7,500 would be an estimate of the closing cost. We do have on fixed rate products a no closing cost option where you take a higher rate and we'll pay the closing costs for you. Also, the seller can contribute. So usually if you go to an open house the first weekend and you put in an offer, they're not going to probably take an offer that where the buyer is asking for them to pay the closing costs. But if something's sitting on the market for a few weeks and you liked it, but you didn't go and it's still there, well, maybe you'll want to consider it now when you want to put an offer in and ask them to pay the closing costs. That's perfectly acceptable. So there are ways to try and have these taken care of without having them come out of your pocket. On a purchase, we can't roll them in. That's not one option we have.
Gotcha. Good advice, good information. Let's move on to our next question. What is a good credit score to have to qualify?
Well, here at the credit union, the minimum suggested credit score, the minimum credit score actually for our products is 620. We give everyone the same rate, regardless of their credit score, as long as it's a qualifying score. That's not how it works with other lenders. If you have a lower score, you're probably going to have a higher rate. I recommend if you can get your credit score into the mid 700s, that you'll be in really good shape. That's what the ideal would be. Minimum 620, 680 or better is decent, but try to get into the 700s.
And if anybody has some questions and is looking to learn how to improve their credit score, we offer a great resource, a green path, and they'll be more than happy to answer your questions and help you develop a budget and a financial plan to increase your credit score over time. Next, perfect. Do you offer credit counseling prior to applying for this mortgage?
Well, Terrence just mentioned GreenPath. So we partner with GreenPath. They offer credit counseling, and it's a free service to all our members, and I recommend you take advantage of it. So they would go over your credit report with you. It's not a hard credit pull because they're just looking to counsel you on how to improve your score or clean up some delinquencies or whatever you have. And I know a lot of people that meet with us, sometimes, they're really scared it's almost like going to the dentist. But this is, we're here to help you, and GreenPath is not here to judge you. We're here to be positive, to get things going in the right direction. So I hope everybody on this call will take advantage of contacting GreenPath and getting their credit, reviewed, because the first step, you need to have decent credit to apply for a mortgage. So even if it's just a thought in your mind, don't put off this part by contacting GreenPath and having that review done.
Awesome. Thank you, Helen. We have about 18 minutes left, and I do see that some questions have come in for the Q&A. We will answer those questions at the end, but please keep them coming. Thank you very much for submitting questions. Next question. What is the interest rate cap after the 10-year fixed rate expires?
So this question is relating to the 40-year 10-1 ARM. The first 10 years are fixed. In our example, it was 6.625. So there's guardrails. In no year, it's going to adjust every year, and it cannot adjust more than 2% from the previous year. So if the first 10 years you're at 6.625, the most you can be in year 11 is 8.625. Rates can also go down, so you could adjust down too. There's no restriction that the rate can't go down. Now, there is also a lifetime cap. So if you started at 6.625, your rate can be no greater than 12.625 in the whole 40 years that you have the product.
That's very informative. Next, are there any penalties for paying the mortgage off early?
No, not on any mortgage product at HUECU. You can refinance at any time. There's no penalty. You can make large principal payments at any time, or you could make extra payments every month. So if you took the 40-year ARM, 2 years from now, rates go down, you refinance, your property's appreciated in value, you're so glad we had this product and that you got into it, there's no penalty for you to pay it off and get out of the mortgage. And there are some disclosures you'll receive, and it will say there's no penalty. So if you're looking with other lenders too, this is a good question to ask. You don't want to get into a product where, you know, I'm going to have a prepayment penalty in the first 5 years or something like that.
Good to know. Next question. Does HUECU provide mortgages for properties outside of Massachusetts?
Yes, we do. For the past several years, we've been providing financing in all of New England. So all the New England states, Connecticut, Rhode Island, Maine, New Hampshire, Vermont, and Massachusetts, we've been financing in those states. And a lot of people have started to consider moving because they're definitely more affordable than Metro. Boston's one of the highest cost areas in the country. But another exciting development that we are working on right now is we are going to be adding Florida to our menu of states that we serve. So I expect this to be available within the next 6 months or so. Really excited about it. I think a lot of people are moving to Florida for the affordability. So be on the lookout on our website. I'm sure you'll receive communications and reach out to us.
Sounds good. A vacation home in Florida sounds real nice, especially with the weather we've been
Oh,
having.
yeah, I know.
Last question. Are there any real estate resources to help members?
Well, okay, so I do recommend that everybody have an online app like Redfin, Zillow, Trulia. Step one, speak with a loan officer. Let us give you some idea just of what you qualify for. We don't have to pull your credit. We can do it very on a verbal, just, you know, in general terms. And then you get some idea, and then you put a search on the online app that you select. I'm looking for a property up to 400,000, a single family in Melrose up to 400,000. You're probably not going to get anything. So then you realize my price point and that town I want to live in don't mix. So then you might expand and add some other towns. So I do that. I'm not even looking for a house, but I do it because I love it. You know, just looking at different communities, just to give people some ideas too, the borrowers that I work with, the members that I work with. Additionally, we MLOs here at the Harvard Credit Union work with a lot of realtors. We do a lot of purchases. So we are able to give you a referral to a realtor, if, you know, depending on the area you're looking at. And I also want to mention that everybody here is probably eligible for the Real Estate Advantage program, and we're a preferred lender there at Harvard University Housing, where they would pair you with a realtor. I think it's with Coldwell Banker, and that's another option as a resource.
Awesome, thank you. And I did show our beautiful MLOs up on the screen, and there are links in the chat if anybody's interested in scheduling an appointment with one of our MLOs to get some more information. Please feel free. Our entire team here is wonderful and ready to answer any and all of your questions. We also have some products and services. If a huge array of mortgage products and services for all, please visit huecu.org/home loans to learn a bit more. And now we're going to get into our questions. I do see we have quite a few questions here in the chat, Helen, and I'm going to start with the first one.
Okay.
This question appears to be about, I think, a slide earlier about the slide 5% down. Let me see. I will move a bit back, and I
Okay,
believe
sure.
it was this one, our 40-year ARM.
Okay.
The question is it 5% down or is it 10% down?
For the 40-year, it's a 10-1 ARM, 5% is the minimum down payment. The first 10 years are fixed. I don't know if I maybe confused that, but it's a minimum 5% down payment on the 10-1 ARM. I mean, we do offer 5% down up to $1 million, you know, loan amount. If you're going over that loan amount, the down payment could be increased. You know, we require, you know, a little higher down payment, but up to $1 million purchase on a single or a condo, we can do a 5% down payment.
Awesome, thank you. Next question, also you have 12 minutes left. Do you work with other agencies like NACA?
No, we don't. We are aware of a lot of agencies out there and we do refer people, but no, I'm not aware of that agency.
Okay, next question.
But I'd love to know more about it. Whoever said that, please contact me. If it's something that can benefit the membership, we would love to know. We're open to growing and learning from you too.
Awesome. I like that. I like that point of view. Great attitude. Next question. Why should we have higher credit scores if everyone gets the same interest rate?
Well, okay, so that's at the Harvard Credit Union, but in the general lender community, you're not going to get the best interest rate if you don't, if you have a lower credit score. At the Harvard Credit Union, we have a good product menu, but there are some products we don't have. So we may talk to you, and it may be that a product we don't offer is the best option for you, and we'll let you know that. We're here as a resource for you. So if you have to go elsewhere, and you have a lower credit score, you're going to get hit with a higher rate. Additionally, I didn't bring this up because it's an abbreviated session, but if you put less than 20% down, you will have private mortgage insurance, which is an additional monthly payment. When your credit score is lower, that payment is so punishing, it's unbelievable. I had someone with a 625 credit score purchasing maybe a $500,000 to $600,000, looking at pre-approval. The PMI payment was $600 a month. It was a deal breaker. They said, I'm not paying that. It made the monthly payment unaffordable. So if your credit score is in the 700s, that same PMI payment might be 150, which is manageable. So I'm happy to talk in more detail with someone about how the PMI works, how it's removed. We did do a big home buying forum in March, and I think those are on YouTube, and it goes into detail about PMI, so you could look at that recording or reach out to one of us. We can go over it with you. But definitely for your best interest to cast a wider net in the event you need a product we don't offer, you want to get your credit score as high as you can.
Good answer. And I do just want to let you know we have about 9 minutes left and 1, 2, 3 more questions. And I'm going to ask you the next question right now. Is the process for applying for a mortgage the same for a person who is the beneficiary of a will and received a home under the will that still has a mortgage payment associated with it? After doing all the process for the estate plan, would the process be the same? Does it have to be done with the same bank that currently holds the mortgage, or can it be done with any bank?
Wow, that's a question I need to think about, but I think it can be done with any bank. I think it would be considered a refinance because you would now be the owner of the property, and you would be looking to do a refinance on that property if you were looking to pay off that mortgage, if there were any other beneficiaries that had to be paid out if you were going to take ownership. I think that person should get in touch with me or one of the MLOs just so we can get more details on that situation to try and give them better guidance, but they don't have to stay with the same bank, no.
Awesome. Thank you, Helen. Next question. Do you provide mortgages for properties overseas?
We do not. We do not provide mortgages for properties overseas, unfortunately. If someone owns a property here, they could do like some kind of a home equity product or a cash out refinance to obtain the funds to buy the property overseas, but we don't do mortgages overseas. These documents are notarized. They have to be notarized on U.S. soil, et cetera. It's a totally different system over there, so we don't.
Okay. And our last question in the Q&A, please, we still have some 8 minutes left. So if anybody wants to ask Helen a question, now is the best time to do so. And can we get a separate loan for the 5% down payment?
So none of the down payment can be borrowed. So you can get a gift from a family member. You can try and obtain down payment assistance. There are some programs out there where it can give you 100% financing. I know Mass Housing has a program. There's a lot of grants out there. So that money can be used towards the down payment. That's acceptable. But trying to get a personal loan for the down payment, you can't, and they trace it too. So they're going to look at all your accounts for the past 2 months. So if you have like a cash deposit or money deposit, they're going to ask where it came from, and you have to prove it and provide where it came from. And if you can't, then that money is disqualified from being part of the transaction. So you really can't borrow for the down payment. Gifts, grants are acceptable.
Thank you, Helen. Oh, we have a new question that just popped in. Can we finance several mortgages through HUECU? For example, if we want to buy multifamily and then rent.
Yes, you can. You can buy a multifamily. If you're talking about you're going to live in it, live in one of the units. So when you sign the paperwork, it says you intend to occupy for a year. So if you live there for a year, then you can rent it out after that. You could rent both units. We do provide that financing. We provide financing up from 1 to 4 family residences. And depending on the price, I think you can use this 10-1 ARM, depending on, there's a limit on the 2 families, which I don't have that limit with me, but you could definitely, we do finance. We finance second homes, investment properties, and primary residences at the credit union, and provide home equity lines and loans on primary residence and second homes.
Okay, thank you. We have about 5 minutes left and no more questions in the Q&A, but if anybody would like to submit something, please now's the time to do so. We'll wait about give it a couple more seconds and then we'll move through. Thank you, Helen. You've been very informative and
Well, Terrence,
yeah,
can
by all
I ask
means.
a question?
Of course.
For the people that have joined this webinar, is the 41 ARM something you'd consider after hearing this? I wish you'd put your answer in the chat, or is it something that you wouldn't be interested in? Do you think it would be helpful to you?
Yeah, please let us know in the Q&A. And we did get one more question. As you're letting us know if the 40-year ARM is something that you would like, I'm going to ask Helen this one last question. And someone asked, how long is the process to get approved?
Well, to get let's call it pre-approved, because you're usually going to come when you don't have a property, but you want to buy a property. I mean, that process can happen overnight. We do the pre-approvals really quickly, within 24 hours. We might ask you to provide us with some income and asset documentation. We want to talk to you, and then we're going to be able to issue you a letter that'll be good for 90 days. And we'll be keeping in touch with you in those 90 days and updating the letter. It's not a one and done type thing.
Oh, and we do have some people in the Q&A right now saying it is an attractive option. So we do have a little bit of traction.
That's great.
Yeah.
So I hope that we hear from some people. There's 5 of us. We have branch hours, like Ryan and I are in the Mass General, Daisy's in Longwood Medical, Mike and Sharon are in the Harvard Square office. So we have office hours in those branches. You can work with any of us, over the phone or on Zoom. You don't have to be, tied to the branch in any way. We're very, very excited to talk with you. We don't want you to be discouraged because of the way the market is right now, because it could change. It could change fast. And we want you to be ready.
Thank you, Helen. I like that hopeful concept. Let's move towards the end now. Please take our survey. Let us know how we did. It'll be huecu.org/survey. We love doing presentations like this, and we are always looking for new ways to deliver value to our membership. See you soon. Our next presentation will be education loans. That will take place on Wednesday, August 9th. Please keep tabs with us and visit huecu.org/financial scoop to learn more. And I don't see any more questions in the chat. Thank you, Helen, for joining us. Also, full disclaimer, this presentation is just a general overview and it's for educational purposes only. This is not legal advice. If you have any specific questions, please feel free to reach out to one of our mortgage loan originators and they will be more than happy to answer questions for you. Please keep in touch. We are HUECU everywhere on all social channels, and all of our recordings will be available on our YouTube page at My HUECU. Again, thank you, Helen, so much. You've been extremely informative.
Thank you,
and
Terrence.
I love presenting with you. You're so knowledgeable, and I hope we get some traction with this 41 ARM because it is a ray of sunlight in this strange real estate market. Okay.
It sure is.